Hello, my name is Selena and I'm a part-time day trader. I started trading like 7 years ago and just recently I started social media. The goal for social media is to share with people things I wish I knew or things that cost me a lot of money to find out. But I've been asking people what kind of videos they would like to make, and from my understanding, a very, very friendly beginner video. I cannot think any more friendlier than this. So without further ado, let's get into candlesticks, which is going to help you read the price action. Price action is the king, definitely. So what are candlesticks? Why do we call them candlesticks? Candlesticks type of price chart, which shows the movement of the price. The price opened here, it closed here, it went higher, it went lower, and that's what happened. It just tells the story of the time frame you chose. Is it 5 minutes? Is it 10 minutes? And where this whole candlestick situation came from. It's actually from 1700s. Isn't that crazy? I'm not gonna dare to pronounce this person's name because I would not want to say wrongly. But they used to put price of rice on rice and mark the rice. See, that's the story of Japanese rice. Rice was Japan's most valuable commodity. Traders needed a way to see supply, demand, and market emotion. So candlesticks were born from that. So on the piece of rice, they will mark it. That's why you see like candlesticks and there's the marks, the open and the closed. Isn't it that interesting and cool fact? All right. So yesterday, today, and always relevant. So this candle could be today, could be 4 hours, could be 1 minute, depends what you're trading. If you're trading like they say from rice markets to stock market, forex, crypto, and beyond, candlesticks remain one of the most powerful tools in trading. 100% is the most powerful tool. It's like learning a brand new language, reading the candles. So how to read the candlestick? Let's go over this. So anatomy of the candle. We have the high price, right? So it shows the price. So what's the highest price they reached if it's today's candle? So today. And what was the lowest that it reached today? What did it open? What did it close? Or did it open here and it closed here? Right? So why the same candle? It looks the same, but one is green and one is red. One is bullish, one is bearish. Why this is bullish? Because it opened here and it pushed up. Oops, not yet. And why? Nope, not yet, you guys. Okay, there we go. Why this one is red? Because it opened here and it pushed down here. Did it went lower? Yes, but it closed here. Did it went higher? Yes, but it opened here. So this is the body, this is the lower, this is what it closed, this is what it closed, this is what it opened, this is what it opened. This is the highest it reached and the lowest that it reached today. All right. So we call this a wick, this is called the body, the lower wick, and the time period. So this could be, like I mentioned, 1 minute, could be 5 minutes, could be 4 hours. So how do we read this? Top to bottom. Okay. So the bullish price, if it opened here and it pushed up all the way to here, but it came back down. When it did open, it went lower a little bit past the open and it closed higher than the open. And the computer will turn your candles green to help you out because the same candle can look bearish. So let's keep talking about the bullish. We kind of went over this, right? It opened right here. It went lower, but yet it bulls pushed up higher, and then the bears pushed down, and that's what it closed. So that's the basic of a candle. Vice versa with the bear, right? So it looks the same, but it opened here, it tried to push up, and then it went down, but it pushed up and closed it here. So open higher and close lower, right? So I don't think there should be any questions about this, why this candle turned red, because it opened higher but closed lower. So the rejection, right? So the upper wick, E1 rejected. Upper wick also rejected. There's a body, there's a lower wick, also rejected. The difference is what it opened and what it closed. Wicks equals rejections. Oh, there you go. Wick shows where I didn't even know it was here. So it shows rejections. So they help you spot the key levels of potential reversals. Longer the wicks, the stronger the rejection, or more buying power. So if it keeps going down and it keeps pushing up, there's more buying pressure. So I did kind of went over this, right? So the difference in the body and why one turns green, why one turns red, right? So bullish signal, bias and control. It gets more green. Sellers they try to go lower, but they didn't. They failed. The buyers step in and they push it up. And vice versa with the bears, right? So the buyers try to take over, but the sellers won. Do we know why we call bear and a bull? So why the bull is green and the bear is red? Do we know why? I hope you said yes. But it's about how these animals attack. So the bulls, you see the horns, they go up, they attack the predator up. When the bears attack, they attack it down, they smash it down, right? So that's why they chose those two animals to represent bulls attack up, bears attack down. So identifying the trend is your friend till the end, they say. So the trend is good unless reversal is coming, and that's why it's so important to know when the reversal is coming. The best traders don't predict markets, they read it, react to it, and manage it. Yeah, 100%. No, so you have to read the story, follow the trend, manage the risk. Yes, but follow the trend is hard if you're looking for reversals. So it depends what your goal is. Is it long term? Is it just today? Or are you doing futures? You only looking at 1 minute chart? So understanding the basics. So we went over the difference, even though they look the same. You are more than welcome to take a screenshot of that. But the only thing that I really want to go over, they call it a hammer, shooting star, morning star, all these fancy ways. I call it a doji. Okay, here it is, a doji. It's like indecision. So they doji about which way they want to go. Doji, it's a big signal for reversal. And we'll see some charts along the way. And I said the stronger the pattern trend before the pattern, the better. So so right now we in the big bull market, and a lot of people try to short. Well, the trend is too strong, and they'll might be experiencing a little bit of pain by shorting right now. But if they read a simple price action, they may not be shorting it yet. All right, this is kind of repeats, but this is what I was talking about. So you have your hammer, but you need to wait for confirmation in order to reverse, right? So we have the engulfing candles, which is right here, and this is for the bears. It could be a trap too. You need to wait for confirmation. So for bullish continuation, look for the 3 white soldiers, rising 3 methods, bull flag. Bull flag is a very, very powerful one. and I'll show you some in the next charts. All right, I think, and the same thing for the bears. All right, so this is the bull flag I was gonna go over. So we went over the hammer or doji, fancy way to say hammer, right? Shooting star because they should reverse to shoot up, and then in engulfing, engulfing means we'll eat it up. So you see how the body is bigger than this body. See how this body is bigger than, so it's engulfing, it's eating it up. So bull flag, a lot of people forget about the full black or get trapped. So let's say there's a lot of volume, a lot good news came out or something will happen, and then it traces back for the fib, which is 50% retracement. I could do the fib video later, but people be like, oh, this is it. Or people will be like, oh, I bought it here and now I'm losing money. Well, actually, you're not, because the market, what does the market do? It's looking for the buyers. So what these people that bought it here, they take in profit. And now the market is going to trace and look for the buyers, and the buyers go up and then we continue to go. So there's a couple ways to trade this. If you didn't catch the momentum, there's no FOMO. We just wait for retracement, we add it in. Or if we get such a good returns, we wait a little bit for the retracement and we can add, because we know, we identify what this is. Same thing here. Bear flag. Market goes down, you're like, oh, it's going to reverse. Well, no, it's the bear flag. It's just going to keep going down. So that's the two opposite things. And there's another one you can take a screenshot for. All right, so the three white soldiers, three black crowds, you're going to hear all kinds of names about it. Just simple way, I guess, simpler way to remember your names, but the bottom line is price action. I love this one, so I really want to go over that. So you see, if you really close your screen and only look at this and only look at this, they're identical. Why one of them works and the other one doesn't work? I'll give you a second. So here we have support, right? We have a support. So because we found the support, most likely we found buyers. Here we try to buy it to go long, meaning on resistance. So your probability and probability here are very different. Trading is about probabilities. Why would you not want to put your money on resistance? The word itself is resisting. It's going to resist you. Can you break the resistance? 100%. Of course you can. But if I see resistance, then most likely everybody else sees the resistance here. So why don't you want to wait a little bit for pullback? Or only put half of your position and wait a little bit, and then you can average it in, because your probabilities going against you are high. So probabilities high to go your way is when we found support. If you look back and let's say in 4-hour chart in 1 year, you see every time you reach 400 in Tesla, it went up. So that's called support. It finds the buyers. That's a good chart too. So, right, the pattern forms, it goes down, 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 down. You do see, you might not get the best price. You tell me how many people can say in every single stock, I bought the very bottom, I bought the very top. Right? So we can probably say, yes, I did it on 1 and 2 stocks, but not every single one. So it's not quite possible. So we wait for what? For confirmation. Now I lost my chart. There you go. And we wait for what? Confirmation. We wait for confirmation, we enter, and then we trail our stop. That's the most beautiful thing I have seen. This is my bread and butter right over here. Like, my eyes are shining right now. So my job is to look for those. So I post my levels, I post the alerts. They're not obviously 100%. but the probabilities of them are high because my job is to find stocks that are oversold, that are ready for reversal. That's my job. And that's what I do every day. I look for people say the market is ultimate high. Yeah, but not all the stocks are ultimate high. So I look for this. Remember, this is hammer or doji, however you want to say it, that's fine. And the same thing here. We look one to sell it or one to have a high probability for the bears. Not everybody is a bull in this market. There's a lot of bears. This is the second most important. Well, I think this is the most important chart. One thing that people do not include with price action is volume. So let me quote Anna Cooling. She said, volume without price is meaningless. Well, let me repeat it one more time. Volume without price is meaningless. And let me explain why. I'm going to use a simple example. So as you see, here's the same, and this one is the same. Why this one works and this one didn't work. So let's say I am selling you my t-shirts and I'm not very successful. So I'm going to give you a sale. Still don't see people. I'm going to give a sale. I'm going to get a sale. At this point, I'm selling at cost. I'm like, okay, made a big sign, like, please someone buy the t-shirts. It took me $7 to make it. Please buy it. So my neighbors run up to me and they say, yes, we'll buy it. I was like, okay, I could raise my price. I have buyers. But it's only 3 neighbors that are buying it from me. Low volume means low people. Market is made out of people. Do we have a lot of algorithms? Yes. Do we have a lot of computers? Yes. But it's still made out of people. So let's explain this chart. Why does it work? I love my aloe sets. I spend too much money that I want to admit on my workout sets. So we all know that on Thanksgiving, they're going to give us 30%. So right before, there's not many sales of it. Right before Thanksgiving comes out, they have this yearly 30% off. I have my notifications on it. They will send me a bunch of emails. But I'm not the only one that knows this, right? And we all run to the store, in this case the app, to buy it. And the buyers are stepping in. Not one, not 3 of my neighbors. Pretty much everybody's buying their workout sets when the sale is here. So the volume, we need people. We need people to push up. So supply and demand, very simple, economical situation. But I hope that helps to realize that we need volume for the price to push up. So you can know all of the terminology for price action, but if you don't have volume, it means nothing, because you could be going and saying, look, I did see the doji, but guess what? There's no reversal because there's no volume, right? We need people. And they say the common mistakes beginners that make to avoid. So my main thing is look for one pattern. Don't overcomplicate yourself. Don't get all the fancy names, right? Everybody's going to tell you to use a stop loss and all that. But there's many, many ways to trade, and everybody can make money. You can go short, you can make money. You can go long, you can make money. There's many, many ways to make money in the market. So I hope I did not waste anyone's time. I hope you took at least something from here and you learned something from this very, very beginner. I understand it's very beginner friendly. 101, it's as beginner as it gets. And I hope you took some value from it. I did not waste any time with me here. That being said, I wish you all to make money and happy trading, everyone. Let me know if you have any questions.